Hello, everyone, and welcome back. My name is Greg Furman, and this is the Vantage Point AI Market Outlook for the week of January the 30th, 2023. Now, to get started this week, we'll begin with the dollar index. Very, very important asset to be class to be looking at the different intermarket correlations of gold, oil, the S&P 500, the numerous forex pairs. But what I would expect in most cases is the dollar has a known cycle of buying at the beginning of the month up until including the week of the non-farm payroll till about the Tuesday after the non-farm payroll numbers. So when I look at this now, what I can see is basically our neural index strength is creeping back to the upside. Our predicted differences are rising. We've got our neural index turning green for the first time, believe it or not, since all the way back on January the 5th. That's the last time we had a positive neural index. Now, there wasn't a huge move there. I believe that was closer to the end of the monthly dollar cycle then. But in most cases, the dollar does see some strength around that first 5 to 8 days of the month. And the indicators in Vantage Point are warning of this because, again, this is an outlook, not a recap of something that's already happened here, guys. We're talking about what we're looking at for next week. So for now, what I can see is we have very little dollar selling down at the low. That's coming in at or about 101.57. So you can see all of these daily bars that are clumped up together. So all we're looking for is any kind of a move. Now, our yearly opening price is 106.63. I believe we can retrace back to that particular level. When we look at our T-cross long, 102.60. If we click on F8 in our Vantage Point software, the first sign of bullish momentum will be a break of 101.98. That is what would be the first. That would be the first thing that would tell us that we're likely moving higher as we get into the middle of next week. So the indicators are supporting that, but the dollar is clearly still bearish on the year, while below our yearly opening price at 103.63. Now, gold, once again, you can see gold up here. Using our weekly opening price of last week of 1929, we have very few buyers of gold up here. So again, if we're coming into a period of known dollar strength, then there's a strong possibility that gold is getting ready to turn lower, if for a corrective move, if nothing else. The yearly opening price here, 1824, but the T-cross long is the one we want to keep our eye on, 1903. That is the likely retracement point by probably the middle of next week, probably Wednesday, Thursday, or sooner. Because again, as you can see, the bars here are lining up and we simply don't have any buyers up here. Very small moves above the weekly opening price, but that's about it. So we've closed the week 1928, but again, our weekly opening price is 1929. So we really haven't done anything with gold on this particular week. So again, with that known seasonal pattern approaching on the dollar that usually is between early to mid February to early to mid April, we're not far from that right now. So watch for gold for potential shorts because you can see that the neural index strength is turned lower, our neural index is down, our predicted differences are pointing down, and we're losing any kind of momentum in the predicted RSI. Now, as we look at Bitcoin again, top performer this year. When we look at Bitcoin from the beginning of the year, now remember, most of your pundits are telling you, don't buy Bitcoin, Bitcoin's a scam. Well, guys, let's make sure we're checking our facts here. Bitcoin is up over 37% on the year. This is your top performer. Single contract buying Bitcoin right off the yearly opening price. You can see that's $6,391. But the profit, the P&L is not what we're looking at. We're looking at basically that, if we're getting this kind of direct move, it just again reaffirms that Bitcoin is a top asset class. You've got BITO, GBTC, you've got a number of blockchain stocks, but the main thing you want to understand here is that Bitcoin follows the S&P 500 and the Nasdaq. It's the same, virtually the same trade. So as you can see, We're starting to run out of buyers up here too. We're getting all clumped up right around this newly formed verified zone from January the 21st, that high coming in at 2309. So significant resistance. I think a pullback next week is more than reasonable. Our T cross long coming in at 21,506. But the yearly opening price is really the one we want to see. If we want to make sure we're staying away from this area, actually 16,541, but we're still bullish while above this area. That's indisputable. Whether you love Bitcoin or hate Bitcoin, it's again bullish on the year. Yes, it had a terrible 2022, but so did the stock market and so did most of your individual stocks. So there's a comparative analysis here that I think is being ignored. But for now, a corrective move next week on Bitcoin is extremely likely, provided that we get the S&P 500 also moving lower. Now, with the S&P 500, we're coming up into a very significant verified resistance, 4,100. So again, at the beginning of the month is usually not always the best time to buy into the stock market because we have that known inverse correlation between the S&P 500 and the dollar index. So the theory would be if the dollar strengthens, the stock market would take a bit of a pullback. Now, our T-cross long, 39.66, that's the level that we would likely pull back to. But again, if we look at our F8 in our VantagePoint software, which is our long-term crossover without the black line, that pivot level on the long predicted is now 40.22. So a breakdown of 40.22 would trigger a much deeper corrective move. But the stocks so far in 2023 are bullish while above the yearly opening price at 38.53. Now, as we look at some of the energy sector here, light sweet crude oil, when we look at oil prices again, another warning sign of the potential of pending dollar strength. Oil struggling considerably up here. The yearly opening price, 80.57. We're unable to hold above this thing, and it's really been trying this year, but nothing. We're still below that key level, closing below there on Friday, but we stopped right on the T-cross long. That level, 79.63. So watch for a break of that. I believe that that is extremely likely next week when we get a bout of dollar strength. But as you can see, the pink line crossing the blue line, if nothing else here, is telling us don't buy oil at this particular time. That's the medium term crossing over the long-term predicted difference. That's a bearish corrective indicator. It doesn't necessarily mean it's a new trend until we break down below the VP T-cross long, but it is warning that that is likely coming. Now, as we look at some of our main Forex pairs going into next week, starting with the euro currency. Now, the one thing with the euro currency is that it's highly susceptible to any movement in the dollar index and in gold prices. So it has a positive correlation, the euro to gold, but an inverse correlation to the dollar index. So we can see that we have no sellers, on the dollar index, and we have very few buyers on gold at the current level. Both of that translates into potential sell-off coming in the euro. It may only be a corrective move back towards our yearly opening price at 107.04, but if that is going to happen, it would likely be next week. So again, you can see the date and time of this presentation. It's on Saturday at 5:23 p.m. Once again, this is an outlook, not a recap of something that's already happened. I just want to bring that to your attention because again, we're forward looking from a predictive standpoint. So the indicators in VantagePoint, the neural index is down. Our neural index strength indicator is pointing down. The neural index itself is down, and we are losing bullish momentum here. So all of this points towards the dollar cycle continuing and the euro moving lower. Now, nothing is 100% obviously in trading, but at certain times of the month and at certain times of the year, I'm a strong fan of seasonal patterns that they're more likely than not. So we'll watch this for next week, but for now, definitely, if nothing else, a corrective move lower coming. on the euro pair. Now, if that's the case, then the US Swiss franc would be getting ready to break higher. So what we're looking for here is we have resistance building up at, or yearly resistance at 92.51 and our T cross long at 92.28. So we're looking for a clean break of this area. We also have a resistance high at 92.80, but in my respectful opinion, putting a buy limit order just above 92.51, and once we break above that, this pair is likely to move higher on dollar strength, but an 85% correlation to the dollar index. So if the dollar index moves higher, this pair is likely to follow. We just need a break of that area. The indicators from a predictive standpoint, our predicted differences are moving to above the zero line. Our neural index strength looks good, and we've got a rising predicted RSI above the 50 level. This all points to bullish momentum here. So good, bad, or indifferent, or right or wrong, that's what the indicators are showing, and that's what we should be prepared for next week. Now, the British pound, again, is in the same grouping as Euro US and US Swiss franc. It's dependent on dollar weakness or dollar strength. So the British pound has enjoyed, as the British pound itself has enjoyed, and the futures contracts have been strong. But that's based on the back of a weaker US dollar. So if that dollar strengthens, and once again, you can see significant verified resistance building at 124.47. So what I would suggest here is be very cautious on Monday. I talk about this in the Vantage Point live training room every week, that essentially Monday is very often a fake price. So if you get a big push to the upside on Euro US on Monday, a big push to the upside on pound dollar on Monday, on Tuesday, it's likely going to go the other way. So be careful of that. Don't be tricked by Monday price action because it's very seldomly accurate. The British pound also losing its momentum here. So everything again points towards some form of dollar strength. Now, with that too, if we're going to see a lot of dollar strength, we would also see it in the dollar yen pair. Now, from an interest rate differential between the Bank of Japan and the Fed, this heavily favors the dollar, even at these extremely lofty levels. But as you can see, very mixed bag here. But a lot of support building on the newly formed verified support low 129.03. So I would respectfully submit that long well above 129.03, but we need a break above the yearly opening price of 131.10, and more specifically, the Vantage Point T-cross long at 130.50. So once again, we can put limit orders just above 138.50. Wait for that break, and the second it does, from a predictive standpoint, we're sitting there waiting for it, and we're avoiding that Monday, Tuesday flip-flop in price action. And again, end of the month flows and into the start of the new month, 90% of the time favors the US dollar. Now, as we move into our main commodity slash equity based currencies, the US CAD, again, sitting at this breakout point. Now, on January the 9th in the Vantage Point software, we formed a verified support low at 133.50. And this particular pair has come down to this level and bounced out of there too many times for me to even list it. The pair is definitely lacking directional momentum. It's trying to break lower. I think it may break lower on Monday and then completely reverse Tuesday and Wednesday. So be careful of this. The indicators are very mixed, but they are pointing that the initial push to begin the week will be down. But what again, I'll respectfully submit that that may be very, very limited. If stocks reverse lower, oil moves lower, Bitcoin moves lower, none of those things support the CAD. The same thing would apply next week to the Aussie US and New Zealand US pairs. They're definitely overextended, but you can see that there's a potential sell signal forming right now. The pink line trying to cross the blue line back to the upside, but it's struggling here. The predicted RSI is starting to roll over. Our neural index strength is warning us This is what I look for more than anything from the VantagePoint software is divergence like this. The market is extended higher for 3 or 4 days, Wednesday, Thursday, and even part of Friday, but the neural index strength is saying that we're actually losing momentum. So this, again, makes me question how strong the equity rally is in the Nasdaq, the S&P 500, the Dow, all of these things, because again, I'm seeing something very similar on New Zealand, where we've got a very strong verified support, verified resistance, excuse me, but the Aussie US and New Zealand US are still above their respective yearly opening prices. So again, that move lower on both of these two pairs would, in theory, still just be corrective in nature. But a lot will depend next week on what happens with the dollar index and more specifically, gold and the S&P 500. So with that said, this is the VantagePoint AI Market Outlook for the week of January the 30th, 2023.